Hey, Wealthy Trades! I want to do a video analysis update on Cathie Wood's corner of the market. It's been a tale of two growth sectors this quarter. We came into September, the quad witching month, looking for a big rotation into clean energy names like Tesla, First Solar, Enphase Energy, and a lot of these Chinese EV names, and that has played out very well. It looks like it is going to continue to play out, which is a big deal because some of these software names, kind of the more tech side of the growth sector, like eCash and e-commerce, they've gotten off to a much slower start. So I'm going to make the argument in this video that these software stocks right now are sort of a pound the table opportunity, in my unprofessional opinion. But before we get into that, I want to explain something that is super important in my analysis, and it's the idea of birds of a feather flocking together. It's what some call the one market hypothesis, but I think it's just the simple fact that the market is organized into exchange traded funds. And that's a big deal. That's a big favor. And Mr. Market doesn't really give favors very often. So when he gives you all these great exchange traded funds, you have to take advantage of them. The most recent example, and this is not the biggest one. It probably isn't even the biggest example from this quarter, right? But the clearest, most obvious example is just most recently, everyone said the stock market was going to crash in, September 20th, right? Because of the Chinese real estate Evergrande fiasco, or whatever was going on, okay? And so the whole stock market sold off together, right? So the debate was that the market had topped, right? We were going to retest the March 2020 lows, whatever, right? Then we saw Microsoft, which is a 20% holding of an ETF called XLK, explode above the September high, right? So over a month ago, Microsoft kind of invalidated the idea that we put in a major top in September, right? So, we were kind of keeping our eye on that. And then within a week after that, right? So in mid-October, the stock market told you that Microsoft hadn't topped. A week after that, 3 weeks ago, XLK, the technology ETF, broke above the September high, right? So that was kind of a preponderance of evidence that Apple, another 20% holding of XLK, like Microsoft, had not put in a major top in September. So if Apple very likely was going to hold the wave 4 low and break above 157, then for the past 3 or 4 weeks, it hasn't really made sense to be drawing rising wedges on the S&P 500 and having your primary expectation be that Apple wouldn't make a new high. So that's kind of the logic behind it. It's important in this video because Tesla is a 10% holding of the ARKK ETF. And we're going to explain right now, it looks like Tesla has pretty good upside. So this looks like a wave 1 and a wave 2. And to be honest, this looks like another wave 1 and another wave 2. And when I say looks like, it's because of wave personality. Generally speaking, 9 times out of 10, a wave 4 will be a bull flag. That sideways triangle, that wear you out wave 4. And a lot of times that kind of dramatic A, B, C, that clear 3 swing correction that really scares a lot of people, a lot of times that's a wave 2. So let's just be conservative right now because we have a pretty clear count from this low. It looks like Tesla formed a wave 1 and a wave 2, then went on a huge wave 3 that exploded past the 161.8% extension. It made a new high on the relative strength index on the daily chart. There is a lot of evidence that is a wave 3 high, which gives a lot of evidence that we are putting in or have put in a wave 4 at the 38.2% retracement. So generally, the 50% retracement of 895 is the wave 4 invalidation. Now, if we did go below that level, it wouldn't be kind of all hope lost yet because bulls are pretty clearly in the driver's seat. Now, I don't think we're going to go below 895 because the lower bound of the pitchfork I expect to contain any downside. But even if we did, right, bulls, we're not out of the woods even. That could easily just be a 1-2, 1-2 Elliott wave nest. We're still looking for an explosive upside. 813 would be a little deeper level for that. But we don't even really need to talk about that, and I don't think we're going to come to that because I think we have put in a wave 4, and that was clearly a wave 3 high. So wave 5 in Elliott wave theory is either going to be the length of wave 1 or it's going to be the length of wave 3 placed at the wave 4 low. So if wave 5 is the length of wave 1, placed at the wave 4 low, then that's a problem because Tesla would not make a new high for wave 5. And that's kind of a law in LA wave theory. Wave 5 has to make a new high above the wave 3 high. That means most likely Tesla's wave 5 isn't going to be the length of wave 1 placed at the wave 4 low. I believe it will be the length of wave 3 placed at the wave 4 low. And this kind of textbook bull flag pattern will play out, and that could send Tesla to the 1600s. Now remember, if Tesla goes past the length of wave 3 placed at the wave 4 low, which is 1368, then Tesla is within a wave 3 on the larger degree, not a wave 5. That means 1368 is just the minimum wave 3 target. We'll have a shallow wave 4 correction and a wave 5 higher. But in that scenario, it would look something like this, where this isn't a wave 3 or a wave 4, it's another wave 1 and another wave 2, and Tesla's exploding right now. So if Tesla goes past 1400, the wave 5 target just within the cycle from the kind of March 2021 low is almost 1600. It's almost 1700, right? It's 1680. So the target is still 1368, 1400. But it looks very likely that Tesla's going to explode past that and go into the 1600s, which means it's going to confirm that it's not within a wave 5 on the larger degree. And the reason is because wave 5 usually isn't bigger than wave 3. Wave 3 is usually the largest wave. So if this is a wave 1 and a wave 2, then Tesla going past 1368, past 1400, all the way to say 1680 would really support the idea that this is a large degree wave 3. That means 1368 is the minimum target. We'd have a shallow wave 4 correction and still be expecting a wave 5 higher. All in all, it looks like Tesla in the short term will hold above 895, and it could, in the larger kind of picture, have a path as high as 2000 in 2022. It's not going to go there in a straight line, but there's a lot of evidence for this across the clean energy sector that Tesla has a lot more upside. And we'll just start with NIO and Xpeng, but a lot of this evidence comes from Enphase Energy. It comes from First Solar. A lot of the clean energy names look like they are in long-term breakouts, and we've predicted many of them. So we'll start with NIO's kind of big bird view. We have a wave 1 and a wave 2 from the IPO. I think we form another 1, 2, 3, 4, 5 waves impulse. For NIO, I think this is clearly an impulse. I think this is a wave 1 and a wave 2. It's almost the exact same thing as Tesla recently, where most of the FinTwit wave 3 community, with a few exceptions, is saying that we're going to have an A, B, C correction. We won't break this wave 1 high. We're going to go on a wave C lower to 20. Now, if NIO was ever at 20, that's kind of a sell the kidneys moment, in my opinion. I don't think it's going to get to 20. I think we're about to see a lot of people FOMO into NIO. But in the larger degree, I think NIO looks something like this, where that's a wave 1 and a wave 2. And I think NIO, the writings on the wall, is going to follow Tesla above kind of that first quarter high. And I think a lot of the Chinese EV names really support this. But in the large degree, that could definitely be a wave 1 and a wave 2. And we're probably not going to break below 30, with 33 being a closer stop. It looks like the length of wave 1 placed with wave 2 low could take NIO to the mid 90s. And that's just the minimum wave 3 target. We'd have a shallow wave 4 correction that conservatively retests the wave 1 high. Then wave 5 is the length of wave 1 placed with the wave 4 low. Yeah, there's a path that takes NIO to the 130s. Now, none of that's guaranteed to happen, but it's just to show there's a lot of upside for NIO if it's above 30 to 33. Okay, it's all risk and reward. And I think right now there's a lot of Chinese EV names like Xpeng that support the idea that we're in a kind of a long-term breakout for this sector. And when we look at First Solar, it's really kind of damning evidence that this is a long-term breakout for clean energy that we're witnessing right now. This is a wave 1 and a wave 2 for Xpeng. We're making a lot of highs above this kind of wave 1 high. And I think that Xpeng has a pretty clear path to the 161.8% extension, which is 63. Now, that's kind of a big deal because from there, we'd expect a shallow wave 4 correction and a wave 5 higher. All in all, a pretty conservative 1, 2, 3, 4, 5 waves impulse. If Xpeng holds above 33, we'll take it all the way to a new all-time high, and that's a big deal because that's going to mean that Xpeng is essentially a ginormous IPO base. So we won't talk about the IPO ETF in this video, but then Xpeng with Unity Software would be two huge holdings of the IPO ETF that have formed an IPO base and kind of started what could be a multi-year, potentially e-cash in the late 2010s type of rally for Xpeng and Li Auto most likely as well, right? So there's the writing on the wall that this is a long-term clean energy breakout. We are going to be chasing some of these sexy stocks. Li Auto is a wave 1 and a wave 2, another wave 1 and another wave 2 that ends around the 50% retracement. I think we form another, this is a wave 1 and a wave 2. So the length of wave 1 placed at the wave 2 low. We don't even need that to be the minimum wave 3 target because the textbook wave 3 target is the 161.8% extension of wave 1, which is 49, which is a new all-time high. So it looks like Li Auto will follow Xpeng, and it will also break above this kind of IPO high. And that also supports the message that we're seeing a long-term clean energy breakout right in front of us. This is a wave 1 and a wave 2. I think that Li Auto will hold above 23 to this low of 25. And I think it's got a lot of upside to 49 before a shallow wave 4 and a wave 5 higher. Now, I think in a lot of these situations, it would be best to trade, the entire sector together, right? If Li Auto broke below 24, 25, but Xpeng was still holding its breakout very well, Xpeng was still above this wave 2 low of 35, I wouldn't be in a rush to sell it. I own both. Okay. But let's look at First Solar, because First Solar is a lot of evidence in the long term that we got a lot of upside. Let's just talk about First Solar in the short term right now. I think that this is a wave 1 and a wave 2, kind of just within the cycle from the low that we formed in September, late September. I think this is a wave 1. We ended a wave 2 right around the 61.8% retracement. So this low is 90.18. I'll go make sure I have that perfect. 90.18 is that low. So it looks like First Solar FSLR is between the 61.8 and the 78.6% retracement. I expect FSLR will hold above 90 and that this is a wave 1 and a wave 2 on the smaller degree. We're looking for FSLR potentially to explode to 133 for a minimum wave 3 target. From there, we'd have a shallow wave 4 correction that will conservatively retest the wave 1 high. Then wave 5 is the length of wave 1, placed at the wave 4 low. All in all, just within a very small cycle, we can see First Solar go to the 150s. And that's a pretty safe bet to make if it's above 90. But the bigger kind of picture for First Solar is a lot more damning than that. So excuse me for these fibs on the smaller degree, but the bigger picture for First Solar says, wait a minute, this looks like an ABC correction, and this looks like a 10-year nest. So I heard someone recently say that they thought clean energy was a fad, that the solar utopia was a dream that was being sold or something like that. That's not really our job as technical analysts and Elliott wave theorists. My opinions about the clean energy stocks aren't really based on some government action. Okay, they're based on the fact that it looks like First Solar has been being accumulated by large institutions for 10 years. This is like a massive base, a 1-2, 1-2 Elliott wave nest. So really, there's only one debate: were large institutions accumulating First Solar this entire time, or were they distributing it? And it's certainly possible that this was all 10 years of distribution, whatever off the high, right? 70% off the high. They started shorting First Solar for 8, 9, 10 years. That's certainly a possibility. Or they were slowly accumulating the sector for the past decade in anticipation for a pretty insane multi-year rally for the clean energy stocks. And I expect that's going to be kind of how it plays out. Enphase Energy is pretty damning evidence that Tesla has more upside. It's pretty damning evidence that the solar ETF TAN has more upside. The Enphase Energy is about 10% of most clean energy ETFs, but it's definitely 10% of the solar ETF TAN. And TAN is still kind of down here, while Enphase Energy has exploded and just blown my projection out of the water. So I'm going to keep my conservative projection for Enphase Energy, and that's that this is a wave 1 and a wave 2 that ended at the 61.8% retracement. The minimum wave 3 target was the length of wave 1, placed at the wave 2 low. That's been met. We broke into a new all-time high, and we have confirmed 8, 9, almost 10 months of institutional accumulation, institutional basing from this high, right? So this is a huge base, And it's looking really good right now that Enphase Energy has more upside. It looks like this is some type of wave 3 in progress. So when it ends, I'll look for a shallow wave 4 correction and a wave 5 higher. But I want to keep the most conservative original projection alive. And that was that if Enphase Energy held above kind of 144, I think I had the 78.6% fib as a wider kind of stop level of 128, that we were going to explode to a wave 3 that would conservatively take Enphase Energy to 240 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the kind of conservative wave 4 low was about 310. And I think that's playing out very well. So if Enphase Energy is going to 310, the solar ETF TAN is going to break above this high, but 2, Tesla's not going to be crashing during that time. That's all kind of a big deal. Let's talk about some of these lower cap, riskier names. And in volatility and reward have a very similar correlation, right? The more volatile a stock is, the more potentially you can be rewarded. So I also take half position sizes in kind of the growth stocks versus the value stocks. And I kind of manage the risk up front. But it's important to realize that these kind of more volatile, some would say way more riskier names, they have a lot more upside potential. And, it's not just the Chinese EV. Bloom Energy looks like a wave 1 and a wave 2. This looks like another wave 1 and another wave 2 that ended at the 61.8% retracement. So the length of wave 1 placed at the wave 2 low, says that Bloom Energy is going to hold this low of 16, which is super wide, but it's going to go all the way to 59 for a pretty conservative wave 3 target. Then we'd expect a shallow wave 4 that will conservatively retest the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. All in all, Bloom Energy looks like it's going to hold above this low of about 16, 17 and go on a rally potentially into the 80s just within this cycle from the March 2020 low. So we're seeing across the market a potentially explosive rally all over the clean energy sector. Plug Power is one, we kind of got on the nose, and it kind of seemed crazy that Plug Power was going to go to the 90s, but I don't really think that's crazy at all. That's the length of wave 1, placed at the wave 2 low. Plug Power is a large holding of the TAN ETF. It's a large holding of a lot of clean energy ETFs. And we just saw Enphase Energy explode above this high and look like it's got more upside to the 300s. I think we're going to see the laggard kind of small cap clean energy names really take the market by storm. And it supports the idea that we're seeing across the market. If we looked at the small caps, the IWM, the IWC to SPY ratio, but really just the small cap chart in general supports the idea that smaller, sexier, riskier names are going to outperform the large caps that many of us are probably tempted to chase at these levels. I think Plug Power will go the length of wave 1, place at the wave 2 low, and in the long term, it's going to the 90s. So there's kind of holistic evidence everywhere you look, right, that we could be seeing some crazy opportunities play out. Vivo Power is a small cap name. It's extremely risky, but it looks like a pretty clean count right here. That this is a 1, 2, 3, 4, 5, a huge wave 1. Now an ABC correction that's ended wave 2 at this 78.6% retracement. So this kind of wave 2 is retesting this wave 1 high. I think Vivo Power, VVPR, has a lot more upside, and it will go the length of wave 1, placed at the wave 2 low. It has upside almost to 30, right? So when we talk about higher risk, higher reward, this has 600% potential upside just kind of within the cycle conservatively from this low. The length of wave 1 placed at the wave 2 low gives a wave 3 target almost to 30 for Vivo Power. And I think that would take a long time, certainly a year, but this could really, be a theme that we see play out in 2022. Let's look at the solar ETF TAN right now, because this is one where we just saw that Enphase Energy exploded above this high, right? This January 25th high, by the way, that Tesla forms, that Enphase Energy forms. Well, Enphase Energy doesn't form this high, but First Solar forms this high on January 25th So does Tesla. So does a lot of the kind of clean energy sector in general form a major high in late January to early February. And I think right now it's kind of silly that the primary expectation is going to be that the solar ETF TAN won't break above this high. I think this is a pretty clear wave 1 and a wave 2 and a huge wave 3 for TAN. We had an ABC correction that ended wave 4, and on the larger degree, it's pretty safe to say that the TAN ETF is going to hold this low of 67, and a little tighter, it's going to hold this low of 75, and it's going to go on a wave 5 at least that is the length of wave 3 placed at the wave 4 low. That means in the larger kind of cycles, even potentially in the first half, certainly by the end of 2022, we see the solar ETF TAN go all the way to the 170s, right? So that's very bullish for Tesla, but it also supports the idea generally that a lot of growth stocks are going to be doing very well, right? If the solar ETF TAN is going to the 170s, then Plug Power and Fuel Cell and QuantumScape and Vivo Power, they're probably going to be exploding during that time. So the shorter degree count of TAN is also really pretty. And remember, we've seen Enphase Energy explode above this high. Enphase Energy is a 10% holding of TAN. Tesla is damn near a 10% holding of ARK. It has also exploded above this high. So this is an ABC correction. We have a wave 1 and a wave 2. It looks like a wave 3 is in progress right now to 109. Conservatively, we'll expect a shallow wave 4 before a wave 5 higher that is at least the length of wave 1 placed at the wave 4 low. All in all, waves 1, 2, 3, 4, and 5 say that pretty soon, we're going to see the solar ETF TAN break above this high from January 25th, the same high that Tesla and First Solar form, and go on a much higher rally. So, I don't want to throw too many ETFs, but this is ACES. It's a really interesting ETF, especially for this channel, because it's a clean energy ETF, and the holdings of this ETF are almost exclusively stocks that I talk about. So I'm pretty sure each of these are 5% holdings for First Solar, Tesla, Enphase Energy, Next Era Energy, and Plug Power are all 5% holdings of ACES, which is a clean energy ETF. And it's another one that looks very pretty. It's a wave 1, an ABC correction wave 2. And remember, Tesla is in this ETF. Enphase Energy is in this ETF, and they have both exploded above this kind of first quarter high. I think ACES very conservatively formed a wave 1 and a wave 2. Is it within a wave 3 to at least 88 before a shallow wave 4 and a wave 5 higher? This is a very clear picture of how this, just in the short term, there's a lot of clean energy upside even in the short term until ACES reaches at least 99. So remember, Tesla is in that ETF. That's why I wanted to include it. Let's talk about some other ETFs. This is the ARK ETF. And this kind of looks identical to that TAN ETF that we just talked about. And I think that ARK right now, it's really an interesting chart because we've seen a few really important ARK holdings like ROKU and PayPal break below this low. But we've also seen some pretty important kind of ARK holdings like Tesla explode above this high. I think ultimately, especially given that we just talked about the solar ETF TAN, a lot of ETFs that look just like this chart in the growth sector look very explosive. And I think this is a wave 1 and a wave 2 for ARK. This is a wave 3 and a wave 4. Pretty conservatively, I think ARK is going to hold above this wave 4 low of 97, and it's going to go on a wave 5 higher that's at least the length of wave 3 placed at the wave 4 low. All in all, in the first half of 2022, almost certainly, in my opinion, by the end of 2022, we see ARK go on a wave 5 higher to about 224. That's almost 100 points higher than it is right now. And that's a pretty safe kind of claim to make if we're above 97. So in the short term, ARK has another pretty view of the market. Remember, we've already seen ARKW break above this high. We talked about, these two clean energy ETFs, ACES and TAN, breaking above this wave 1 high. But this is a wave 1 and a wave 2 that ended between the 61.8 and the 78.6% retracement. So very tight, 104 to kind of this low of 106 isn't broken. A little wider, 97 isn't broken. But I think ARK, even in the short term, has a clear wave 1 and wave 2. It's within a wave 3 higher to 154 before a shallow wave 4 and a wave 5 higher. So the charts of ARK, TAN, a lot of ETFs that are just kind of software and clean energy holdings, they're kind of sending a very similar message that a lot of retail traders have fallen asleep on some growth stocks that have very sexy fundamental stories. And it looks like there's the writing on the wall that at some point in 2022, preferably the first half of 2022, retail traders are going to be chasing these stocks at new highs. I think that's going to happen. I think we're about to see people chase a lot of names. I think they're going to chase Tesla. I think they're going to chase Bitcoin very soon. Let's talk about Roku. Roku is a pretty important holding of ARK, and it's between the 50 and 61.8% retracement of kind of the wave 1, wave 2, wave 3, wave 4, and wave 5 kind of impulse that is on the all-time chart. So the only reason I'm saying this is because a lot of times if I see an Elliott wave theorist predict something that I missed, I'm going to give them the benefit of the doubt. If they predict an impulse before it happens, then I'm going to really pay attention to what they have to say for the next kind of leg, higher or lower. And I kind of predicted that Roku was going to explode from this level. Way back in, the summer of 2020, I said Roku was going to be the stock of the summer with Tesla and with Beyond Meat. And Roku then exploded, and I had several posts about Roku during this rally calling for more upside. The only reason that I really mention that right now is because a lot of times if someone predicts the impulse before it happens, they've got a pretty good idea of what's going to happen after that. So that's all I kind of wanted to say. If we look at Roku right now, it's kind of clearly an impulse on the all-time chart. I'll get the 161.8% extension. That should have been the negative 161.8% extension. But if we see right now, pretty clearly a wave 1 and a wave 2, wave 3 explodes past the 161.8% extension. So I think that there's a lot of evidence that this is an impulse structure. And I think it's almost kind of undebatable that this is an impulse structure. So let's talk about kind of the worst case scenario for Roku. Even if you were a bear for Roku and you're calling this a wave 1 impulse from this high, then you'd probably be looking for a wave 2 correction to short before a wave 3 to the downside, a wave 4, and a wave 5 higher. Now that seems kind of silly, but the only reason that I'm pointing that out is because even if I were a bear, I would still be looking for a wave 2 correction to short before a more dump, wave 3 to the downside. I don't really think that's going to happen, but I just wanted to kind of point out, I think Roku might be incomplete right now, where even if you were a bear, you're still expecting kind of a wave 2 relief. But I don't really think that's accurate. And I think if we look at PayPal in a second, there's a very similar idea that this is a stop raid. And you don't want to call everything a stop raid. You definitely don't want to trade everything, down to zero. But this is kind of an important chart. It's a wave 1, 2, 3, 4, and 5, a clear 5 waves impulse. And if we measure the Fibonacci retracement zone, we're between the 50 and the 61.8% retracement. So generally, a wave 2 kind of has to have room to the 61.8% retracement. The good news is if Roku ever breaks above this high, it's going to be kind of a nuts breakout, because this is going to be clearly a wave 1 and a wave 2. The minimum wave 3 target would be 700. And then we'd expect a shallow wave 4 before a wave 5 higher. Conservatively, wave 4 retest the wave 1 high. Then wave 5 is the length of wave 1 placed at the wave 4 low. So I think Roku for waves 1, 2, 3, 4, and 5 has a path close to 950. Now, a lot of times when I say, a number like 900 or 1,000, people forget that stock splits exist. And, they'll say there's no way that NVIDIA is going to 900, to 1,000. And then there's a stock split and all of a sudden 900 was really just 220. I think that some of these stocks like Fastly maybe, but Zoom going to 1,100, Roku going to 950 potentially in the longer term cycles. It sounds crazy, but we might have a stock split in between there. For risk management, really, the 61.8% retracement kind of has to be respected right now. And that wouldn't mean it'd be doomsday if it were broken. But, really the only problem with the 61.8% retracement is that the 78.6% retracement is kind of a lot further down, right? You don't want to have the stop be 124. I think right now, Roku between 202 to 256, it's an objective place that some gurus would call a demand zone. I think that this is where we're going to see a wave 2 reaction result in an explosive wave 3 to the upside. So for something like this, what I would say is that a daily close below 61.8% retracement of 202 might be the stop. The worst thing that I could see is that Roku goes below this and stops on a dime at this wave one high of 176. I don't think either of those things are going to happen. I think this is a wave one and a wave two, and I think Roku is getting ready for a pretty explosive rally in 2022, preferably even the first half of 2022. We are going to see most of the market, with most of the ARK holdings in general, chase Roku, in this kind of 600 to 700 range. I think right now, if it's above 202 on a closing basis, then that's the stop. The invalidation level is this wave one high of 176. I'm expecting an explosive rally for Roku. Now, some people will say that trades shouldn't become long-term investments, okay? I think that's silly. And for me, as an Elliott wave theorist, I'm always looking at stocks that I'm bullish on in the short term and I'm bullish on in the long term. So Disney is a very great example of a trade that I think, quite honestly, can become a long-term investment for me, because I like this on the long-term charts, and now it's looking glorious. So I didn't even really plan to talk about Disney, but can a trade become a long-term investment? I think it can. It might also be interesting to note that Disney is a streaming stock, but this looks like a 1, 2, 3, 4, 5 huge wave one. What I had was that Disney wouldn't break below 167. So the trade was a wave 5 higher to 220. The trade got invalidated, but I was always looking for a ABC correction that was going to take Disney to a really kind of fortuitous opportunity around 150. And that's happening right now. So Disney is a failed trade, but in my opinion, it's an incredible long-term opportunity. And we're at the length of wave A, place of the wave B high, where wave C ended. And this is a blue chip right now. It looks like it's going to go on the length of wave one, place of the wave 2 low, and conservatively go to the 270s just for a minimum wave 3 target. I think it holds above 141. So Disney's also a streaming stock. The only reason that I wanted to talk about it was because I do think that trades can become long-term investments, at least for me, because I'm looking for stocks that I like on a lot of time frames. Here's PayPal. I want to show with PayPal. One, it's another example where I predicted most of this rally. I actually predicted this entire rally in full. The only reason I mentioned that is because I normally kind of give the benefit of the doubt to the wave theorists who saw the move before it happened. So for PayPal, this is a wave one and a wave two. I think this is another wave one and another wave two. We're between the 61.8 and the 78.6% retracement. It's kind of similar to Roku, where you don't want to call everything a bear trap, but man, this looks like a huge shakeout. You don't want to be the guy who brings up Bitcoin and Litecoin and Ethereum looking like they're going to explode. But man, it's just like November of 2020, where eCash looks ready to explode, and a lot of kind of in the same way the oil sector. I'm not correlating the oil sector, but it's a very similar environment right now where oil stocks, small caps, industrials, and growth stocks look like they're going to do very well, and hopefully some of the large cap names, some of the large cap indices will underperform slightly while the small caps take up the mantle. For PayPal, very similar to November of last year, I think that this is an incredible opportunity. It's a wave one and a wave two between the 61.8 and the 78.6% retracement. I think the length of wave one, place of the wave two low, is going to take PayPal to 341 before a shallow wave four that retests the wave one high and a wave five higher to 450. So PayPal more than doubling, potentially on the table conservatively, and that would be that this is a 1-2-1-2 Elliott wave nest. Ideally, we see a really nice reaction from PayPal right here. So I'm going to be covering PayPal and Roku pretty intensively. But what I imagine right now is that sometimes it's better to wait for a 1, 2, 3, 4, 5 waves impulse and really help confirm that we put in a wave too low. But right now, I do expect PayPal will have a pretty nice reaction from the zone. So the stop, we're at the 78.6% retracement. I guess a wider invalidation level would be this low of 171 for calling this another wave one and another wave two. What I want to do, I want to point out what could be a different count that in my opinion is still very much the same thing. So I'll remove these fibs for a little bit and we'll talk about what could be a slightly different count that would have the same result. And then that's on the all-time chart, very similar to kind of what we talked about with ARK and TAN, that this is a wave one and a wave two, and this is a large wave three that went all the way. It definitely exploded past the 161.8% extension. But this is all a huge wave three. And then if this was a wave four, the 38.2 and the 50% retracement is where we would expect a reaction for a 1, 2, 3, 4. So we're at the 50% retracement I would like to see a pretty nice reaction right here. I think that 171, 172 is a level that is pretty objective. We should hold above that level and go on a much further rally to the upside. I'll give the 61.8% retracement for PayPal right here too. The 61.8% retracement is also, let's see if it's close, 169. So 169 to 172, that's really a level to be above. But I really think we're gonna see a pretty nice reaction from PayPal in a lot of different scenarios, that this is going to attract a lot of buyers, in my opinion. So I think we hold above 172. I think we go a lot higher, and I think that there's a lot of charts that really support this. Square Cash, is one where it's interesting because Square Cash hasn't broken down, and I think this is really good for ARK. I think it's really good for PayPal and Roku even, that there are kind of some holdings of ARK that have broken down. There are some holdings of ARK that have exploded, and there's some like Square Cash and TWLO that have really just stayed sideways. This is an ABC correction for Square Cash. I think this is a wave 1 and a wave 2. I think this is another 1, 2, 3, 4, 5 wave 1 and an ABC correction putting in another wave 2. So the 61.8% retracement means we should definitely be calling this a wave 2 that ended. So if we're above 222, which is kind of way too tight, then we're going to go on a wave 3 higher that is at least the length of wave 1, place of the wave 2 low. And that means in a pretty conservative view, Square Cash has more upside to 319. Now, the 78.6% retracement is generally a wider stop. That's 212. I think that's also a pretty important level for PayPal bulls to pay attention to. Square Cash holding about 212. It looks like there's a lot of evidence. The length of wave 1, place of the wave 2 low. It's going to take SQ to 319 before a shallow wave 4 that conservatively retests the wave 1 high, and a wave 5 that is at least the length of wave 1, place of the wave 4 low. All in all, waves 1, 2, 3, 4, and 5 can take Square Cash to 385 just within the cycle from this low from May. And I think that May low is a really important validation level. It's around 191, 192. But I think also this is a wave 1 and a wave 2. So ideally, we won't see the 78.6% retracement go. And we're going to start a wave 3. The length of wave 1, place of the wave 2 low. Says we should see Square Cash go on a rally to 319. And this rally for wave 1 is less than 3 months. So I'm not kidding when I say the first quarter, the second quarter, some of these ETFs that we're about to talk about can reach exorbitant price targets, to be quite honest. And I think Square Cash really supports the idea that this is kind of a capitulation moment in a lot of the e-cash and e-commerce side of things. Here is an ETF called ONLN, very similar to what we just talked about. 1, Alibaba's in this ETF. 2, Amazon is about a 20% holding of this ETF. 3, Shopify is in this ETF. Shopify had a really nice breakout, but Amazon today almost hit new all-time highs, and that's a huge portion of this ETF, which is also a huge portion of Alibaba. So didn't we just talk about this with PayPal and the solar ETF TAN and ARK, a wave 1 and a wave 2, a huge wave 3 and a wave 4 that ended at the 38.2 to 50% retracement. So if we're above 61, that's a pretty conservative wave 4 stop, a pretty nice wave 4 stop, and the length of wave 3, place at the wave 4 low. Now we have Amazon breaking out, we have Shopify breaking out. It's Black Friday. You don't trade the headlines, but you don't be a robot either. The length of wave 3, place at the wave 4 low, ONLN, looks like it's going to go to 128. So that looks really good, and it lines up with a lot of what we're seeing. That we're seeing e-commerce and e-cash capitulate, and that in 2022, preferably in the first half of 2022, we're going to see retail traders chase this sector, okay? You will see people chase Bitcoin. You will see people chase Tesla. You will see people chase NEO. That is going to happen sooner than you think. This is a wave 1 and a wave 2, a huge wave 3 and a wave 4. Pretty conservatively, this is going to 128. And yeah, that could be another wave 1 and another wave 2. But with Amazon getting close to a new all-time high, you look at this ONLN, ETF, and you just start Googling the holdings. That's what I do. If we look right now, let's look at Amazon itself. Man, wait a minute. I thought the market was frothy. This doesn't look very frothy. This looks like one of the most important stocks in the market. Hasn't done anything for almost a year and 2 or 3 months, right? That's not froth. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. This is looking very good for Amazon. This is looking great. We're about to break this wave 1 high and confirm that we're within wave 3 of wave 3 of wave 3. That's a big deal. That's a wave 1 and a wave 2. That means that we're going to explode past the minimum wave 3 target of about 3,830. Okay, that's the minimum wave 3 target. From there, we'd expect a shallow wave 4 that retests the wave 1 high, and a wave 5 that's at least the length of wave 1 placed at the wave 4 low. All in all, Amazon's going to 4,400. I think it sees it by the first quarter. Could see it by Christmas. 4,400 isn't that far away, but this is looking very good, especially for e-commerce bulls, especially for stock market bulls, especially for a lot of bulls in a lot of different sectors. They're going to love that Amazon is about to break a new all-time high and confirm it's within wave 3 of wave 3. That means 1, the stock market probably won't crash during that time. 2, we better start looking at e-commerce stocks and sooner rather than later. If we look at Alibaba right now, I bought Alibaba in the 160s. I took a full position, and I knew perfectly well that they had earnings, and I knew perfectly well that Alibaba could gap down past my stop to 0. And to be honest, I was okay with that. What I wasn't okay with is what I think is going to happen, that Alibaba is going to explode and begin a multi-year rally. To me, holding growth stocks through earnings is part of investing, and that's just a personal opinion. The whole point of growth stocks is that a trader hypothetically is rewarded for stomaching the drops that a lot of people just simply can't take. So I get rid of the risk management up front. Generally, I take a half position in growth stocks. I took a full position in Alibaba. It's kind of a value stock, but also I really want exposure to the Chinese sector, the e-commerce sector, and the growth kind of software sector. And Alibaba really helps me do that. This is the wave 1 and a wave 2. It's another wave 1 and another wave 2. We'll look at NetEase in a second. But we've got a lot of confirmation. This is a wave 1 and a wave 2. Alibaba is going to at least 328 for a minimum silly wave 3 target. But from there, we'd expect a shallow wave 4 that retests the wave 1 high before the length of wave 1, places the wave 4 low, takes Alibaba to 507. So it's a pretty low risk trade to have a stop at 130. Let's see, 129, 130. That's a pretty tight stop, but it's also kind of a low risk stop. And if Alibaba's above there, it could get very explosive to the upside. So I own Alibaba, and I'm going to hold through, dips, because you get paid for the volatility. Okay. The volatility and the price have a very strong correlation. Okay. It hasn't been easy to hold Bitcoin. It hasn't been easy to hold Netflix and Amazon and Nvidia. Okay. But the people who have, they've been rewarded handsomely. I think Alibaba, I think a lot of these kind of growth stocks are definitely going to fit into that description. NetEase, NTES. This is gorgeous. This is a huge indication that Alibaba is not done. This is a wave 1 and a wave 2. This chart is identical to Alibaba, and it should be, because this is another Chinese internet name, NTES. It's a 1, 2, 3, 4, 5, another wave 1, a wave 2 that ended between the 50% and the 61.8% retracement. The length of wave 1, place at the wave 2 low, is going to take NetEase all the way to 175. That's the minimum wave 3 target. From there, I expect a shallow wave 4 before a wave 5 higher, all the way to 230. I think this looks really good. I don't think NetEase breaks below 77 to the 61.8% retracement, which is 74. Very important for Alibaba bulls. Here's PSJ. PSJ is a software ETF, and there's not really too many forms of technical analysis that say this is a short. To be honest, this is insane. What did we just talk about? Wave 1, wave 2, huge wave 3, ABC correction wave 4, the length of wave 3, place at the wave 4 low, is going to take PSJ to 257. This rally is from 316 to 208. That means that in the first 2 or 3 quarters of 2022, certainly the first half, almost positive, the end of 2022, the length of wave 3, place at the wave 4 low, is going to take PSJ to 257. I'm looking for that to happen by the June quad witching, and I think we're going to hold above 128 and begin a pretty explosive rally. But this is a software ETF, and the ETF of this software sector, this growth sector, this clean energy sector is saying that we should be looking for stocks with very sexy fundamentals that a lot of retail traders are falling asleep on, because they are about to chase these stocks at new highs. And PSJ is one of many examples. ONLN, it's kind of an elephant in the room to me. TWLO is another glorious example. of what could be happening in the software sector. This is the wave 1 and a wave 2. It's another one where I predict almost this entire rally before it happens. We have an ABC correction we put in a wave 2 between the 61.8 and the 78.6% retracement. So we have a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. The price target comes from this red degree right here. So if this is a wave 1 and a wave 2, the length of wave 1 placed with wave 2 low takes TWLO into about the 514 area. Then we have a shallow wave 4 that retests the wave 1 high before a wave 5 potentially takes TWLO as high as 692, and that could be very explosive. That could happen in the first half of 2022, that we go on a waves 1, 2, wave 3 to 514, shallow wave 4 correction, and then a wave 5 higher to the 690 range. I really think that at least within the summer of 2022, TWLO will hold some of these important lows. The most important low is this low of 216. We're getting a little close to that. I think 267 would be a little tight, but I think that TWLO holds both of them, has a much further rally from this point, and it's more of the same. We've fallen asleep on this sector, but the options market certainly has not. Here is Fastly. Fastly formed a 1, 2, 3, 4, 5, a huge wave 1, and this is a very risky growth stock, but the reward is certainly there. And I think that part of the evidence comes from the fact Datadog, sold off with Fastly. It sold off with a lot of clean energy stocks. It moved step for step with Fastly. Throughout 2020. Then it sold off with Fastly, in the first quarter, but then Datadog has exploded. And very similar kind of Cloudflare has exploded, and we definitely predicted Cloudflare before it happens. I think Fastly is going to follow. I think this is a wave 1 and a wave 2. Fastly will hold above 33. It has put in a wave 2 low at the 78.6% retracement. It will go the length of wave 1, place at the wave 2 low. It will reach 159. So the length of wave A, place at the wave B high is where wave C ended. That's kind of how I enter stocks. I enter stocks where the length of wave A, placed at the wave B high is where wave C ended. That's worked out very well for me. The length of wave 1, placed at the wave 2 low, says that above 33, we're going to go to 159 before a shallow wave 4 and a wave 5 higher. Fastly looks really good. It's more evidence that some of these riskier names with sexy fundamentals are going to be the darlings that they were in 2020. Zoom. I mean, this is a 1, 2, 3, 4, 5 huge wave 1 and an ABC correction to put in a huge wave 2. I don't think we should discount the metaverse headlines, and we'll go over that in a second with Unity Software. But Zoom, this looks very explosive, and I think a lot of people are going to say, wait a minute, we have all this reopening news, we have all this stuff. How is Zoom going to explode? I think the fundamental story could be the metaverse, but that doesn't really matter. I think the wave count is what's really important. This is a 1, 2, 3, 4, 5, a huge wave 1, an ABC correction putting in a wave 2 at the 61.8% retracement. The 78.6% fib is the stop. The length of wave 1, placed with wave 2 low, says Zoom holds above 173 and goes on a rally to 777 before a shallow wave 4 that retests the wave 1 high, and a wave 5 that is at least the length of wave 1, placed with the wave 4 low. Zoom can be going to the 1100 range. That is about 400% higher from its current levels. So, there's this theme where the more volatile a stock is, the higher the potential reward. That's why we do the growth stocks in their own video, because it's a lot different game than Pfizer and, Boeing and Disney. Okay, here's Palantir. Palantir is another kind of example. I think before we even do Palantir, we have to talk about the fact that we've been covering Unity Software and Palantir together all summer, and we said that Unity Software looked like it was an IPO base. It looked very explosive, and it was going to the median of this pitchfork. Now Unity Software has done that, right? So this kind of does go into the Palantir analysis that, wait a minute, doesn't this kind of look very similar to Palantir? It's a 1, 2, 3, 4, 5, a huge wave 1 from the IPO low, then an ABC correction that ended a huge wave 2. We said the length of wave 1 placed at the wave 2 low gave a minimum wave 3 target of 186. And we've exploded kind of past that. It looks like Unity Software is going to the median of the pitchfork. But more importantly, it looks like Unity Software is a massive IPO base, and that this could be a multi-year rally that comes out of this. So, a lot of classical traders, they'll wait for the base breakout. I'd rather look at the stocks that haven't broken out yet, that probably are going to follow the stock that's breaking out. And I think Palantir is that for Unity Software. And I think this looks pretty good. We'll talk about kind of let's just talk about the big count for Palantir right now. Simply kind of put, if we take the 61.8 and the 78.6% fib of this entire IPO rally, then we have a pretty nice reaction that most certainly or almost certainly could be a wave 2 low between the 78.6 and the 61.8% retracement. So this is kind of the first kind of bit of evidence that this is a wave 1 and a wave 2. This is a 1, 2, 3, 4, 5. Wave 1 subdivided into 5 waves and an ABC correction that ended wave 2. It looks identical to Unity software. So that 78.6% fib is about 16-ish, which really coincides with the wave 2 low of 17. So I think 16 to 17, bulls really want to trade above that level. I don't know if it would be the end of the world, but there has to be a risk management level. I think 17.05. We just have to see Palantir stay above that. The length of this wave 1, or the 161.8% extension of this small wave 1, is 33. Then I'd see a shallow wave 4 and a wave 5 higher. I think if we looked at some of the other, we talked enough about ETFs in this video, but there's a lot of kind of this 1-2, 1-2 nesting action. If we look at the IPO ETF, I think that this is a 1-2, 1-2 LA wave nest. Palantir is going to get explosive here and enter wave 3 of wave 3 of the larger degree wave 3. I think Palantir is an IPO base. And there's no really guarantee in trading, but if we're above 17.05, this is certainly one that can turn around on a dime at any moment and go start heading above this wave 1 high and end up being what Square Cash and PayPal and Shopify were in 2017, 2018, multi-year rallies from this base breakout. And this is kind of how I see XPEV. It's how I see Li Auto. It's how I see, a lot of these IPO names. If we break above this wave 1 high, it's not going to be sell at 45. It's going to be, probably sell half at 45 and let the rest run for several years. So Palantir looks really good. Fiverr, I love Fiverr. It's kind of the last e-commerce stock. We talk about the e-cash, the e-commerce sector doing very well. I think this is a 1, 2, 3, 4, 5, a huge wave 1. Fiverr, another example, we break the IPO low. We form this IPO base. And when we break out of the IPO base, look what happens, right? This is how I see Palantir, right? I think this is what Palantir is going to look like at 45, 46, 47. It's going to look just like this. I think this is what XPEV will look like in the 80s. I think this is what Li Auto will look like in the 50s. It's going to look just like this. And it's probably going to end up being just like that. I think that was all a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low is going to take Fiverr to 469. Then we have a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 2 low. I'm looking for kind of a multi-year rally for this one, but I do think it's going to occur. I think this is an e-commerce giant, and this is a really kind of clean count. I think if we hold the 61.8% retracement, which is 138, very tight above 152, but really 138, we're going to see the length of wave 1 placed at the wave 2 low is going to take Fiverr on a wave 3 higher to 469, and that's kind of the minimum wave 3 target. We'd have a shallow wave 4 and a wave 5 higher, so Fiverr has a lot more upside. I think it's very good evidence. Here's Beyond Meat. Beyond Meat looks pretty good. It has a wave 1 and an ABC wave 2. I think this is a 1, 2, 3, 4, 5, a clear 5 waves impulse. I think this is an ABC correction that is kind of shaking out most traders, and maybe rightfully so. But if we look right now, this could be a 1, 2, 3, 4, 5, a wave 1, and it's a little wide, but I think there's a low probability that we break below 48. I really do. And I think if we hold above 48, which we almost certainly will, then this is a 1, 2, 3, 4, 5, a huge wave 1 and a wave 2. Now, we have broken below the original stop. This may be one kind of similar to Roku, kind of similar to PayPal, that I'm just going to be covering very closely, and we can wait for a 1, 2, 3, 4, 5 waves reaction to form a wave 1, then buy the wave 2 before waves 3, 4, and 5 to the upside. So we don't really have a great low to trade against besides 48, but I think there's a very low probability that Beyond Meat breaks below 48. I think it goes on a huge wave 3. The length of wave 1 placed at the wave 2 low says this could be a 2-year IPO base. And if we ever see Beyond Meat above this high, then it was Amazon. It really was. I mean, this is what, growth stock investing can do. I don't know what's going to happen to Beyond Meat, but I know that if it breaks above this high at any point ever, it's going to be one of the biggest breakouts in the history of the stock market. I really mean that. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. If we hold above this low of 48, which is a little wide, maybe it's best to wait for a 1, 2, 3, 4, 5 waves impulse to develop. We kind of know that if Beyond Meat ever breaks above this high of 239, it is gone. It's a beeline to the 600, 700, 800 range, probably a stock split to 200, and then another thrust again. I mean, this is really an IPO-based breakout in the making. And we haven't seen a break above 239 yet. If we do, though, it's going to be a historic rally for Beyond Meat. This is a 1, 2, 3, 4, 5, a wave 1 and a wave 2, 35, 30% short float coming into earnings. I imagine those institutions are covering like crazy right now because the length of wave 1 placed with wave 2 low says a massive short squeeze to the 250s is on the radar before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low. If wave 4 conservatively retests the wave 1 high, could take Beyond Meat to 392. So 48's a little wide, but I don't think it gets broken. It may be best to wait for a 1, 2, 3, 4, 5 waves impulse to develop for a wave 1. We'll look to buy a wave 2 before an explosive waves 3, 4, and 5 to the upside. But I think Beyond Meat, I think ROKU, I think PayPal, I'm going to watch them very closely. I think all of them are pretty incredible opportunities. Virgin Galactic, Space, I think this is a pretty insane opportunity. Let me just talk about this kind of short-term view. I touched on this in my last video. I think that this is a pretty clear 1, 2, 3, 4, 5 waves impulse for Space on the larger degree. Let me just make sure that I have this kind of cleanly counted right now. What we have for Space on kind of the all-time chart is potentially a huge nest, where this could be a wave 1 and a wave 2, and this could be another wave 1 and another wave 2. I believe that this wave 1 and wave 2 is very cleanly subdivided into 1, 2, 3, 4, 5 waves. And I think that this wave 2 ended at the 78.6% retracement. So I think that Space will hold above 14.27 and it will go on a huge wave 3 higher. The length of wave 1 placed with wave 2 low will take Space to 60. And that's a very conservative wave 3 target. From there, I'd expect a shallow wave 4 correction and a wave 5 higher. The length of wave 1 placed with wave 4 low could take Space to 100. It really could. And I think that could happen by June, by July, potentially. I think Space, there's no guarantee it won't break below 14, but it's got pretty insane risk reward right now. It's about a $3 per share loss if it goes below 14. It's almost $80 per share upside if it doesn't, to be honest. This is a wave 1 and a wave 2. The length of wave 1 placed with wave 2 low takes Space to 60 before a shallow wave 4 that retests the wave 1 high. Wave 5 is at least the length of wave 1 placed with wave 4 low. And 100, it sounds crazy, but it's conservative within the cycle from this 1, 2, 3, 4, 5 waves impulse. Space, 0% implied volatility, rank and percentile for a long time. Options being accumulated like crazy on the bar chart straddle and strangle screener. You're about to see Space have an explosive move. It could be below 14 and Space goes to 5. But it could be we don't break below 14 and this huge move that the options market is screaming is about to happen resolves to the upside. I think that's going to be the case. Here's Nano Dimension. It's another one of these small cap names. I wanted to look at the chart of IWM in this video, but IWM, the small caps, a lot of the growth ETFs we just talked about, they really support the idea of a stock picker's market. And even this quarter, but certainly in 2022, that we're going to see some of these darlings come to life. I think for Nano Dimension, this is a wave 1 and a wave 2. This is a 1, 2, 3, 4, 5, another wave 1 and another wave 2 that ended at the 78.6% retracement. So this is where a wave 2 is supposed to end. It's a little tight, but this is another one. It's a wave 1 and a wave 2. The wave 1 high is 4.89. The 78.6% retracement is 4.86, and we're at 4.84. So, this is where I'm expecting a massive reaction from Nano Dimension. And a lot of these ARK holdings are sending the exact same message. Retail has fallen asleep on growth stocks with sexy names, and they're going to be following them, chasing them above new highs in 2022. For Nano Dimension, we are at the 78.6% fib. We are at the wave 1 high. They're basically the same number. So the wider invalidation is silly. It's 1.32. For me, the risk management is in the position size. The length of wave 1, place of the wave 2 low, takes Nano Dimension potentially to the 20s. That's a minimum wave 3 target. I can't even talk about after that, but 500% upside. Certainly not out of the question. Bitcoin, right? I've got a track record. We were talking about Bitcoin, in this range. It quintupled. We were talking about Bitcoin in this range. It's doubled. We were talking about Ripple in this range. It's gone up 600%. We talked about Ethereum since 500, right? Volatility is, very synonymous with reward. And Bitcoin's a perfect example of that. I think this is a 1, 2, 3, 4, 5, a huge wave 1 and a wave 2. The length of wave 1 placed with the wave 2 low is going to take Bitcoin to 90,000. And yeah, you probably think that's crazy. You probably thought that Bitcoin was never going to break above this high either, but 90,000 is conservative. Then we'll have a shallow wave 4 that retests the wave 1 high. before wave 5 that is at least the length of wave 1 placed at the wave 4 low. 90,000 isn't even the most conservative target. That's just the conservative wave 3 target. The conservative target for waves 3, 4, and 5 is 126,000. So yeah, you're about to see retail chase Bitcoin. Don't be surprised if we have a $10,000 candle in one day. Here's Ethereum. Ethereum, I mean, this is the untouched chart from my videos. It doesn't really get any better than this. 1, 2, 3, 4, 5, wave 1, ABC wave 2. The length of wave 1 placed at wave 2 low gets an equal legs kind of reaction, but I don't think that's a wave 3. I don't think that's a wave 4. I think what we're doing right now is we're nesting. I really do. I think we're about to see Ethereum. I think we're about to see Litecoin and Ripple. They're about to rip. I've posted about each of those recently, but just in this video, I think this is a 1, 2, 1, 2 Elliott wave nest. A little closer fibs could be, 3,500 is a pretty tight stop for me. We've been screaming about Bitcoin and Ethereum for a long time, so we're well in the driver's seat as far as this channel is concerned. But I do think this is a nest. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. We're gonna get a pretty crazy reaction, and we're gonna enter wave 3 of wave 3. You're about to chase Ethereum above 7,000.